ETFs are great for people with lower risk tolerance. But what about investing in just a single ETF? Does it make sense? And is diversification worth sacrificing potential gains? Hey friends, my name is Hassan. I'm a researcher, and on this channel we discuss business and personal finance in Germany. Let's talk about the pros and cons of this strategy. The main advantage of investing in ETFs is diversification. Instead of putting all of your eggs in one basket with individual stocks, you can invest in a basket of different stocks or other assets. Plus, ETFs are typically low cost, have a low minimum investment requirement, and are easy to buy and sell, making them an excellent choice for beginner investors. However, the main disadvantage of investing in ETFs is that you are buying into an entire index, sector, or in some cases, thousands of companies from all over the world. This means you can't pick and choose which stocks or assets you want to invest in. This could limit your potential returns if you miss out on the big winners. So what is my favorite ETF investing strategy? It's the broad market ETF strategy. This means investing in an ETF that tracks the entire stock market, like the S&P 500 index. By investing in a broad market ETF, you can capture the overall performance of the stock market, which historically has delivered solid returns over the long term. Another benefit of this strategy is that it's simple and easy to execute. You don't have to spend hours researching individual stocks trying to predict which ones will perform well. Instead, you can sit back and let the market do its thing. Please hit the like button if you're getting value from this video. There are, however, some downsides to this strategy. For example, during market downturns, you could see a significant drop in the value of your investment. You won't be able to capture the upside potential of individual stocks that outperform the market. Now let's compare this strategy to investing in individual stocks. The main advantage of investing in individual stocks is the potential for higher returns. If you pick the right stocks, you could see significant gains that outperform the overall market. However, the downside of investing in individual stocks is the risk of losing your money if you pick the wrong ones. And not to mention, it's time consuming and can be stressful to research individual stocks and try to predict which one will perform well. Now, a single ETF strategy is one where you only invest in a single ETF rather than spreading your money across multiple ETFs or individual stocks. This approach is easy and simple to maintain, and it can reduce the risk of your portfolio because you're investing in a diversified basket of stocks. But why stop at one ETF? Why not 2 or 10 or 100? Well, because too many ETFs can lead to analysis paralysis. Investing in multiple ETFs can lead to over-diversification, which can result in lower returns. Additionally, having a large portfolio of ETFs can be confusing and difficult to manage. So what kind of ETF should you choose for a single ETF investing strategy? Well, it depends on your financial goals and risk tolerance. If you're looking for long-term growth, you might want to consider an S&P 500 index ETF. If you're looking for more stability, you might consider a bond ETF. In this video, I share the best ETFs for beginners, and if you want to know how to research stocks and ETFs, you can watch this video. So thanks for watching, bleib gesund, and I'll see you in this video.